You've said that Bitcoin could crash 40% after this FTX crisis drama.
Oh, yeah.
Hey guys, welcome back to Library of Wealth. Today we have senior commodity strategist Mike McGlone giving us his market outlook for Bitcoin, as well as the stock and crypto market and what we can expect moving into 2023. McGlone believes that the last month of 2022 will likely resume with a recession and pain points that mimic the crash of 1929. McGlone also believes Bitcoin is likely to become a risk-off asset in the near future and advises that it's imperative that people consider the reason why Bitcoin has decreased in the first place. He points out that the market has undergone one of the biggest corrections in the stock and crypto market history, and as an impending global recession looms on the horizon, Bitcoin remains a strong indicator of what's going on in world markets as well. Let's listen to this interview with Mike McGlone as he gives his prediction for Bitcoin and the crypto market heading into 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Bitcoin could easily now reach that 12,000 to 10,000 support level. I mean, that would be very low in my view. But how it happened is quite significant because it happened on the back of extremely low volatility. 30-day volatility in Bitcoin just dropped to the lowest level ever versus the NASDAQ, versus S&P 500, versus crude oil, and versus Bloomberg Commodity Index. They're most of different things. It just got very low. So its indication's ready to break out. I thought at some point it was going to break out upwards, but it's breaking down with a good fundamental reason. Collapse of FTX, and as Darcy mentioned, there's just plenty of scams out there. So it's got a good reason to go down, and it's got the fundamental technical signals to do that in the short term. But I look at it as within an elongated bull market. The key thing to remember is Bitcoin in terms of market cap and cryptos in terms of market cap is a rounding error compared to what's happened this year. The example, the total market cap of cryptos dropped about 1.3 trillion this year based on data in marketcap.com, coinmarketcap.com. That's the equivalent of two stocks. Amazon and Google dropped about 1.4 trillion so far this year. So it needs to be put in context of what's happening. This is the ebbing tide for all assets. Cryptos were the fastest on the way up. They're going down the fastest, and they're probably going to be the first one to come out of this and recover. We're just not near that point at the moment.
Why would Bitcoin? Why should we believe in it still?
We know there's 21,000 or so crypto assets listed in coinmarketcap.com. Maybe 100 of those will be legitimate and really matter in the next 5 or 10 years, and maybe 12 of those really matter now. And yes, there's a risk that Bitcoin could not be the one. That's why we launched the Bloomberg Galaxy Crypto Index in 2018. Part of the reason, to me, that's the ultimate way to really track this space for institutional investors, be able to push a button, track an ETF that tracks the physical. To me, that's going to happen. It's a matter of time. And this issue of FTX will tilt the regulation that way, but I agree with you. Why Bitcoin? I don't know for sure, but remember, Bitcoin is the only asset that I've ever seen that is no one's project, no one's liability, and it's the most fluid 24/7 trading vehicle I've ever seen, and it's becoming a digital version of gold and a world going that way. And then you have 12,000 wannabes. Now, Ethereum is a pretty significant measure of technology that I view as kind of akin to futures were almost 50 years ago when they came out, and ETFs were maybe 30 years ago when they came out. But yeah, I'm not certain it's going to be Bitcoin, but sure is showing the signs of surviving 1,000 cuts.
McGlone believes that Bitcoin is in a process of recovery as commodities will begin to crash. He points out that many currencies worldwide have declined tremendously and that the impending global recession will be severe and ultimately cause those markets to collapse.
That sledgehammer to me is pounding out the foundation for Bitcoin to trade more like those risk-off type assets, and it's just a matter of time. The key thing from the Chairman Powell, there's going to be no surprise from this. He's going to come out still pounding because he has to. Inflation's still high, and if you look forward, his risk-reward is still he needs to get inflation down. But we're at the point now that we're heading towards a very 1929-ish type scenario. The whole world is tilting towards recession. That's just not my view. That's the view of the curve. What's happened with commodities spike in the past, and Bloomberg economics team. Yet most central banks in history are still tightening. That's typically an oxymoron compared to what's happened in the last 40 years of market. So that dangling carrot of liquidity that helps save everyone is not there. And Powell knows he can't put it there until we have potentially lower plateau and risk assets. Because number one means commodities, still the only one that's still up on the year. It's just cryptos have been the leading measure of speculation and excesses of excess on the way down, and we're never going to see the ease of ease from the Fed as we have in the past. So that's the stage we're in right now. But if there's any market, I mean, cryptos have already backed up 80%, and you just don't want to get too bearish when things are 80%. I think we're in the final stages of this bear market for cryptos, but it's not going to be easy. And typically markets don't just make V bottoms. They have to make it as difficult as possible. And the key thing I learned trading, especially bear markets, is they'll make you lose your hair. They'll take money from everybody, and they have to be volatile and difficult. But that's the key thing. Remember, this is not a crypto winter. This is an everything winter, except for one asset class, the commodities. So commodities have to go down. If they don't, the Fed's going to keep tightening until they do. And so that, to me, is the way I look at it. And then at some point, we're going to come out of this. But right now, as we head towards the end of this year, and we see chairman still pounding, we see the Fed fund rate expectations for next year, still for more tightening a year from now. That is bad for all risk assets. But then let's look forward. Right now, and let's just look at the price of Ethereum. It's $1,200. At the end of 2019, it was $100. So it's still up 12x. It's holding good support around 1,000. It might get a little bit below that, but I fully expect that to come out ahead and to continue that upward trajectory over time. The key thing to remember, and I have to leave you with this, is Bitcoin and Ethereum, the two stalwarts in the space, have declining and definable diminishing supply and increasing adoption and demand. From a commodity standpoint, something's got to change in that trajectory, and I fully expect the adoption point to increase after bumps in the road, and prices have to go up over time. And then let's remember what Ethereum is doing for this space. It's allowing the most widely traded crypto assets, crypto dollars. If you click on volume on any one of these websites, Tether's number one, then there's a dozen of them. It's allowing this to happen, and the whole world has gone to the dollar organically through crypto. So when you talk about CBDCs, good luck, China. Good luck, Russia. The world's already gone for the dollar. It's just a matter of proper regulation in the U.S., which is going to accelerate now with the collapse of some of the recent firms you're hearing about. Cryptos are just a good example, and this is the thing I started pointing out years ago with the proliferation of crypto dollars, is cryptos are a good example of the world tilting for the dollar and away from the yuan. Why? We know why. I mean, there's so many things going bad in China, yet they're just the least worse in the U.S. So sure, the dollar's a little expensive right now. It's got really too expensive. It's bounced back. The Fed's tightening. The rest of the world's trying to catch up. But, you know, overall, the dollar's still one of the best ways to transact and transmit value and do it quickly. And Bitcoin is a complement to CBDCs. I look at the crypto dollars are akin to euro dollars were when they started about 50 years ago. And it's just the crypto version, tokenization of assets, just getting started.
Even though McGlone holds Bitcoin in high esteem and in the lead of the coming bull run, he stresses that it's imperative that people consider holding more than one crypto in their portfolio. As markets fluctuate and the world economy changes, having a diversity in cryptocurrency allows for flexibility in considering who the next winners will be. What do you guys think about Mike McGlone's opinion for the last quarter of 2022? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.